committee. Deanne Julius, first the interest rate. Everyone's welcomed the cut, both parties and people in the city and the rest of it, but everybody's also saying it'll take time to feed through, and it may not feed through at all in many cases.
Indeed, I mean, interest rate changes always take time. We usually figure it'll take about a year, in fact 12 months, before you see the full impact of an interest rate change on the economy. And of course we've had several previous interest rate changes, so we're still in this policy space where we don't yet know what all the effects will be.
And John McFall, if we're talking about a year, as Deanne Julius suggests, then when we look at something like Nissan, who are sacking 1,200 workers as we speak, this is going to have no effect in the wider economy.
Well, I don't think you can say it's going to have no effect, John, but the issue here today is that capital is scarce. There is insufficient cash in the economy, and the cash credit lines from the banks has frozen up. That's the government's #1 priority, and it has to deal with that, because however low we bring interest rates, if there is no lending available, if it's severely restricted, then that's going to have a problem, and that's on the government's doorstep, and it has to deal with it.
Well, I mean, this is what brings us to this awful quantitative easing business. I mean, if this business of cutting interest rates doesn't free up capital, doesn't get banks lending to each other and to us, then what do? Do we print money?
Well, I think there are several policy fronts we can be acting on. Monetary policy is one of them. Quantitative easing is the extreme. We're not there yet, and in my view, we shouldn't go there yet. But government guarantees of loans, as John McFall was just talking about, that's also a very important policy.
Isn't that slushy quantitative easing? I mean, basically lending money for longer than you would normally against assets you wouldn't normally bother to lend against?
No, it's an entirely different instrument. If the government puts through guarantees of bank loans so that banks themselves are sharing that credit risk, and there's always a credit risk when you're in a recession, as we are. So that's a type of fiscal policy, not monetary policy. And really we do need operations on all fronts. The other thing that's happening, of course, is that sterling is depreciated. That too provides stimulus to the economy. So there are a number of policy changes that are now starting to take effect. I think one needs to be a little bit patient about some of these.
Well, John McFall, presumably you would want tougher action taken with the banks to get them lending.
Well, I'm concerned about the situation with the banks, and I think Deanne Julius will agree with me that banks at the moment are acting rationally and logically in their own interests by storing their capital and not lending, but collectively it's a form of madness or suicide for the country, and they need to all do this together. And if the banks don't do this together, if the encouragement is not there from the government or from the regulator of the Bank of England, then the government itself has to do something to free up the markets. Maybe a year or so ago, if I'd come on this programme and say, look, maybe there should be a state bank, maybe the government should take control of this yourself, I would have been subject to the charge perhaps, well, this is a loony left response, but there are economists today that are thinking of situations like this because of the situation we're in, John, and we really have to have radical think about how we're going to get these credit lines going again. That's the #1 item, I can't stress it enough.
Well, Deanne Julius, as our report showed, ordinary individuals are not prepared to spend, are not prepared to borrow money. They want basically to pay off their mortgages if they possibly can. If they get spare money because the mortgages become cheaper, they want to pay the mortgage off. So how do you persuade banks to be anything other than responsible, which is presumably what they are being, by trying to restore their capital base?
I think that's right. One does want responsible banks and responsible householders. What the banks need to do is to make sure they're providing the short-term credit for business to roll over for its working capital.
But if they don't, what do you do?
Well, one reason that they're reluctant is that the money that the government has put into the banks to recapitalize them is costing them 12% interest on those preference shares. If you're borrowing money from the government at 12% and expected to lend at 5-6%, that's no way to make money, obviously.
So should the government change the terms it gave the money?
I think that would be one thing that the government should do.
By how much?
They would need to negotiate that, but 12% is way above what other countries have charged, 5% in the US, for example.
Well, John McFall, that sounds quite an important issue, 12%. Would you be prepared to see the government change the terms on which it gave the money to the banks?
John, let's think back. This arrangement was made over a 72-hour period or a weekend, and we are, if you like, stuck with that situation. But we don't need to be stuck with it, because I believe that there will be a case for further capitalisation of banks, whether it's actual money being put into the government or the government taking bad debts off banks. So this has got a phase 2 as far as I'm concerned, and there is a point there to look at in terms of the money that's paid back by the banks
You would
to the
not be
government.
prepared to see an alteration of the original terms on which the money was lent. You would not be prepared to see a cutting of that interest rate to, say, 6%.
I think that this is a very flexible situation, and I'm quite happy for the government and the banks to get together so that we can have confidence with the money that the government has put into the banks, and that confidence can be transmitted to businesses and to the larger economy. It's getting confidence back into the banks that's extremely important.
You'd probably agree.
I would agree, and I think it's just important to note that quantitative easing is not a panacea. Many economists think it didn't actually help in Japan, and it creates all sorts of other risks.
Dion Julius, John McFall, thank you both very much indeed for coming in. And a little later in the programme,